Good morning and thanks so much for tuning into the trade setup. I'm Neeraj Shah. It's a packed trade setup. Excuse me if I go slightly long, but a bunch of result reactions today. And imagine this is just the start of the earnings season. First, the global news flow. Tesla dropped Model Y starting price below the average US vehicle. In some sense, Tesla is now starting to compete not with the Mercedes but with the Ford. Alphabet and Microsoft earnings beat estimates, and that should help Nasdaq today, even as Nasdaq underperformed in trade yesterday. And we'll come to that in a moment. Joe Biden makes it official. He's running again in 2024. And oil has held its drop as demand weakness spurs stock of refinery cuts. Well, that's the long and short of what's happening around the world. By the way, sugar prices have inched up, and that should also be mentioned here. I haven't, but keep that in mind. Now, what the US markets did overnight is the key thing. Look at the Nasdaq, down 2%, S&P 1.5%, Dow 1%. But the Nasdaq might have a bit of a support in today's trading session, so that is to be kept in mind. The other cues will come up on your screen. Not that the markets move because of technical triggers like what's happening to the bond yield or what's happening to the volatility index, etc. Those are resultant factors. So volatility inched up because of what is happening in the market as a result of because of results. Dollar index stable, 10-year yield at 3.41, like is largely stable, so no big changes there. The SGX Nifty indicates a cut, I'm sure. I wouldn't be surprised if that were to happen. But yes, we probably going to start off lower. Well, 0.19%, I'm a bit surprised. I thought it would be more severe, but be that as it may, we're looking at a slight downtick in the session. Now, um, what's the trade setup? I mean, yesterday, if you saw market getting sold at higher points of resistance, is indicative of the fact that there is not so much confidence to take the markets higher purely on the back of just flows. In fact, the Bank Nifty yesterday made two unsuccessful attempts to breach the 42,800 zone, which further strengthens the resistance zone in this area, and which is the point that I was making. I mean, somehow the odds are not in favor of leverage longs. We've been trying horse now, and hopefully we get proven wrong from a bull's perspective, but somehow it seems that the market is facing resistance at the upper end, and therefore the trades, if any very large positional trades, should not be on the long side. I mean, of course, the fact that we are also in the expiry week will also play its part, but somehow I believe that, and on the index at least, leverage longs may not necessarily do the trick. Most smart people tell me that don't look at the index, don't trade the index, look at under the hood and try and trade individual pockets. Now, if you traded, for example, two-wheelers in the last few days, you would have made money. And I still think that two-wheeler stocks may have some more optimism after what Bajaj Auto's commentary has been like. And this sentence from mine is incomplete, but crop protection and agri plays also should be in focus today, for the wrong reasons, of course. Remember, viewers, yesterday we put out this story of Amada, which is that global crop protection giant, not coming out with good numbers that had put UPL under pressure. Today, Rallis's numbers will put that space, whole agri crop protection space, further under pressure. So do watch out for that pocket. But just before we get to that, mark the results today. It's a very heavy results day. Four large names in the form of Bajaj Finance, Maruti, and the life insurance twins in HDFC Life and SBI Life. And then you have Voltas, Oracle Financial, KPIT Tech would be an important one because they have to deliver the numbers in order to justify the valuations that they are trading at. Canfin Homes, UTI AMC. So a bunch of very important results to watch out for in the session today. Now, stocks to watch. I'm doing a mix and match of large caps and mid caps, but going by the order of importance to my mind. I'm starting off with what I believe would be one howler of a morning for Rallis. The numbers looked very weak. Higher raw material costs coupled with higher OPEX, which was up about 16% YOI, resulted in a negative EBITDA for Rallis India. There's a net loss of 69 crores impacted by a weak operating performance and a higher interest cost, which was up about 300% YOY. So EBITDA very wobbly, negative EBITDA, net loss of 69 crores. And the fact that if it turns out to be an El Nino year, then even FY24 is under a bit of a cloud, coupled with the fact that agri crop protection is not looking that strong. And you certainly have a day which is a confluence of negative events for Rallis. Do watch out for this one. I suspect that this would probably get beaten down in the session today at the opening itself. Now, Bajaj Auto is the interesting one. It's put in a bit of a rally behind it, mind you. But look at the numbers, look at the commentary, look at what's working for Bajaj Auto. So the revenues were up 12%, 8904 crores. The Bloomberg estimates were 8567, so ahead of estimates. EBITDA rose 26% to 1716. The estimates were 1572, ahead of estimates. EBITDA margin 19.28% versus 19%, but the Bloomberg estimates were 18.3%. So it's beaten the EBITDA margins handsomely by about 1,100 basis points, excuse me. And the net profit fell 2%, but again ahead of Bloomberg's estimates. So it did really well. Now, this is an 18 PE stock at about 4% dividend yield, net cash 15,000 crores. It's doing really well on that front. Now, what is working for the stock of Bajaj Auto? When I spoke to fund managers and experts, Nigeria exports are bottoming out. And in fact, on the con call, they've kind of said something to this effect as well. The India two-wheeler sales and even three-wheeler sales are picking up. In fact, frankly, on three-wheeler sales, look at the last line. CNG prices are now down substantially from what they were. Bajaj is a dominant market share in the three-wheeler CNG space, and therefore it could gain from this technical factor as well. And the Triumph launch in June and the EV three-wheeler launch coming up soon should all help the numbers for Bajaj Auto. So for a company which has been in hibernation for a while, there's a turn of events with all of which look at some positivity. I dare say watch out for Bajaj Auto, despite the rally that it's put behind it. There could be some moves today. Now, remember, for on their part, brokerages like CLSA, Stewart and McIntosh, and some others have cut the target price on Bajaj Auto, but Morgan Stanley is overweight and they have raised the target to 5063 from 4486. They've raised the Morgan Stanley has raised the EPS estimates by 8% for FY24 and 12% for FY25, reflecting a strong mix. The FY24 P is about 18 times, which Morgan Stanley says is largely in line with the 10-year average. And they say that the industry recovery plus Triumph and the EV win option value with 4% dividend yield keeps them overweight. All the same arguments that the buy side has as well. So the sell side, buy side, a bit of a confluence. Morgan Stanley raising the price target as well. The numbers seem solid, even though it's put in a bit of a rally behind it. I dare say it could be an interesting stock to monitor in the session today. So watch out for Bajaj Auto. And by the way, since you're talking about autos, watch out for Tata Motors as well. Non-results, S&P Global has upgraded Tata Motors ratings to BB, and their outlook is stable. And therefore, that's a positive for Bajaj Auto. Done at the JLR end too, by the way. So watch out for Tata Motors as well. And definitely watch out for Mahindra CIE. The numbers, Q1 CY24 numbers, revenues up 18% at 2440. The estimates were 2390, so largely in line. But EBITDA up 35%, 380 crores. The estimates were 332. EBITDA margin 15.6%. Estimates were 13.9. Net profit up a whopping 73%, 279 crores. Estimates were 188 crores. The highest ever margin in the company history. EU business performed much ahead of estimates, and the ROC is now nudging the 20% mark for Mahindra CIE. All of these factors should mean that the stock should have a positive outing in the session today. Analysts that I spoke to suggested that the stock is all set for a re-rating, with the stock trading at about 13 times calendar year 24 earnings, despite being an MNC auto ancillary now. So, I mean, great numbers, as these statistics show that with ROC also nudging the 20% mark, things are good for Mahindra CIE. Very likely that the stock will do well today. So watch out for this one. Tata Consumer, good numbers on the EBITDA front, but there's a pickle. Now, first the numbers. Revenues up 14% at 3618 crores. The estimates were 3511. EBITDA margin at 14.1. Handsome beat. 150 basis points in that business is great news. Net profit up 23% at 268 crores. Estimates for 267. So that is in line. The improvement in EBITDA margins despite flattish gross margins is a great thing. What Jeffries seemed to suggest, though, in their note, and I think they are waiting for some updates coming in on the con call, but Jeffries in the note are suggesting that what's the logic of not reporting advertisement spends. I think they have not disclosed reporting ad spends, they find it a bit perplexing because it's a key cost head in the case of any FMCG company and cannot be due to competitive reasoning. And this is the fly in the ointment, but not that big a fly. I'm sure analysts will ask them, they'll probably give their responses to. So this is an important one to monitor. So let's wait and watch. But Tata Consumer should certainly be a stock that could do well today on the margin beat. Dalmia Bharat could be a stock that could correct on the margin miss today. Revenues were up 3912, slightly ahead of estimates, if you will, or actually in line. The EBITDA margin contracted 18% versus 20.6. Net profit 121% higher. The one-offs, of course, there, but the OPEX, higher OPEX, drove the EBITDA miss. Brokerage ratings post con call coming out, and which is why may not be a massive reaction, but clearly the operating expenses driving the EBITDA miss is a bit of a issue for the stock in this today's session. Let's wait and watch what it does. Then continuing with results first, AU Small Finance Bank, NI up 30%, GNPA better on a QOQ basis. Net NPA is of course better on a QOQ basis. PAT up 23% at 424 versus 346. Can't find faults with this one. They're slowing down a little bit, but the asset quality is maintained. It's probably slowing down because the RBI has asked them to do so as per our checks as well. Could be interesting to see what a small finance bank, how it reacts. Remember, it's a stock that rallied quite a bit, then saw a bit of a pullback as well. Can it move up again on these numbers? Remains to be seen. And then real estate companies, one good, one bad. Anantraj, revenues up 30%, EBITDA up 195%, EBITDA margin really shoots up, net profit up 118%, very strong reported numbers, could react. Mahindra Life Space, weak numbers. Revenues up 57%, which is good. But there's an EBITDA loss of 27 crores. Net profit down 99%. The weakest launches in quarter four, just zero point 0.4 million square feet versus 1.1 million square feet in Q3, just shows how wobbly the quarter was for Mahindra Life. Yesterday, they won an 850 crore project in Malad West in Mulund, but that notwithstanding, the reported quarter number is not the best, and therefore maybe Anandraj does well, and maybe Mahindra Life Space does not. So, well, do watch out for this one too. What else? I think there is some news flow around IGL and Adani Total Gas, wherein PNGRB has issued the authorization for disputed Noida, Gurugram, and Faridabad gas. Noida has been assigned to IGL, but Faridabad has not been. It's been given to ATGL because they've done some work there. I think from what I read, maybe IGL might have a reaction on the basis of this. So do watch out for that. Watch out for Gujarat PSUs, by the way, viewers. The Gujarat government has given a new policy for dividends, buybacks, and all the other major things. This is a big thing, by the way. Dividend distribution bonus shares for state PSUs. And apparently it's positive for almost all Gujarat PSUs. I've tried to speak to people. People don't have an exact clarity on the numerical benefits for each of these, but it's net a positive for all PSUs. It brings about a bit of methodology to what the PSU companies will do when it comes to dividends or buybacks, etc. And in fact, it may serve as a bit of a role model for other PSUs as well across the country. I think it's a big positive for Gujarat state PSUs, and therefore all companies, I mean, for people who are confused about the names, GNFC, GSFC, GMDC, GSEL, GSPC, Gujarat Industries Power, there are 5 or 6 of these. But yeah, they should all be positive. So do watch out for these ones. We could have a bit of a reaction in these stocks in the session today as well. So these are a few names, viewers, that you should watch out for. To my mind, top of the list are Rallis, Bajaj Auto, Tata Motors maybe, Mahindra CIE for sure, and Mahindra Life Space on the negative side, though even Anantraj on the positive side could do well. So there are these 5 or 6 names which are very important and should be monitored. In addition to sugar stocks, in addition to Gujarat state PSUs, just look at the large list of reactions that are possible in the session today. That's it on the trade setup. A bunch of very interesting conversations starting this week. 10 a.m. we have HDFC Securities Unmesh Sharma, Bajaj Auto conversation at 10:30 a.m. So that is to be watched out for, as well. ED Rakesh Sharma will join in to talk about how strong the quarter was for them. So that is to be watched out for as well. And of course, the mutual fund show with Kaustubh Bilapurkar and Rushabh Desai to talk about pharma as well as tax saving schemes that can be started from the first month itself, so that you are not clogged for making large investments in the last quarter and the last month of the financial year. There is a query on gold and silver. Well, frankly, I'm not an expert, from what little I understand. Uh, Things look optimistic, and if you look at the last 15 years history, gold, Kevin, has given amazing CAGR returns, no doubt aided by the fact that the rupee is depreciated. And if the rupee doesn't depreciate and appreciates, then that might not give you the same kind of returns. But if history is anything to go by, gold is a great bet. In fact, Kevin, I would urge you to watch the show that we did with Motilal Oswal. Alpha Strategist was the show a few days back. It's there on YouTube as well, wherein they give a very interesting insight on how gold is a great investment asset, but silver is not. And you might want to check that out when you're doing your allocation between gold and silver. Uh, they had their reasoning, they had the data to prove it. I would urge you to watch that show as well. Anybody can watch that show, of course, but since Kevin had a view on gold and silver. Thanks so much, viewers, for tuning in. Have a great day ahead, and see you on Talking Point.